while most investors panicked as the markets crashed in 2025. One man stayed calm. Not only calm, but loaded. Warren Buffett, the Oracle of Omaha, sat quietly on a war chest of $344 billion in pure cash. And while Wall Street burned, he waited, patiently, intentionally. But why would one of the greatest investors of all time not deploy capital during a raging bull market? Today, we'll break down Buffett's most strategic play in years, and what it means for you. To understand Buffett's move in 2025, we have to rewind the clock. Warren Edward Buffett, born in 1930 in Omaha, Nebraska, bought his first stock at age 11. By his teens, he was running businesses out of his garage. Newspapers, pinball machines, chewing gum. Later, he studied under the legendary Benjamin Graham, the father of value investing, at Columbia Business School. This shaped Buffett's entire worldview. Buy great businesses when they're undervalued. And wait. In 1965, he took control of a dying textile company called Berkshire Hathaway, and he turned it into a $900+ billion empire with stakes in Coca-Cola, Apple, and American Express. By 2025, Buffett had built a fortune of over $154 billion and earned the nickname the Oracle of Omaha. Fast forward to early 2025. The S&P 500 drops nearly 14%. Investors panic. Inflation remains sticky. Recession fears creep in. And tariffs, they're back in the headlines. And Buffett, he's sitting on a record $344 billion in cash, cash equivalents, and T-bills. Berkshire Hathaway sold off positions in Apple, Bank of America, Capital One, Citigroup, and more for 9 consecutive quarters. Why? Because Buffett believed the market was dangerously overvalued. There's a metric called the Buffett indicator. It compares total US market cap to GDP. Historically, 100% means fair value. But in 2025, it hit 187%. That's way above the 158% threshold for concern. In simple terms, the market was overpriced. So what did Buffett do? He did what most can't. He waited. He refused to invest in overvalued assets, even if that meant missing out on short-term gains. Buffett once said, "Cash combined with courage in a crisis is priceless." And in 2025, he's living that quote. While others scrambled for safety, he already had it. His $344 billion isn't just cash, it's optionality. It gives him the power to act when others can't. When stocks get cheap, when companies need rescuing, when the fear peaks, Buffett will strike. Some critics say he's hoarding cash and missing opportunities. And sure, if the market bounces back quickly, he could miss out on short-term upside. But history tells a different story. In 2008, Buffett deployed billions during the financial crash, buying when no one else would. Those moves, they paid off massively. So, what can you learn from Buffett's $344 billion move? First, patience isn't just a virtue, it's a strategy. In a world obsessed with speed, Buffett proves that true power lies in waiting. Not passively, but intentionally. Watching, analyzing, preparing. The best opportunities don't shout. They whisper, while everyone else is screaming. Liquidity is not just safety, it's power. Cash is optionality. When the market crashes and fear takes over, those with liquidity are not victims, they're hunters. They don't just survive the storm, they capitalize on it. Valuation matters. Always. In bull markets, fundamentals often get ignored. But Buffett doesn't chase hype or headlines. He focuses on the numbers, the business beneath the ticker. He buys quality with a margin of safety, not promises wrapped in FOMO. While most investors follow the crowd, Buffett walks alone. Not because he's different, but because he's disciplined. He waits with conviction. And when the moment comes, he moves decisively. In the end, he's not playing the game of the month. He's playing the game of the decade. And the real question is, what game are you playing? Warren Buffett's $344 billion move isn't flashy. It's not viral, but it just might be one of the smartest plays in modern investing. While the world panics, he prepares. Because he understands what few do. Markets move in cycles, but discipline endures. As he once said, "The stock market is a device for transferring money from the impatient to the patient." That's not just a quote, it's a roadmap. So next time the market dips, the headlines scream and the fear sets in. Pause, breathe, and ask yourself, are you ready to panic or are you ready to buy? Because in the end, wealth isn't built by reacting to noise. It's built by listening to whispers and having the courage to act when others freeze. If this video made you think differently, leave a like and a comment to support our channel. Stay smart, stay patient, and keep learning.